Mark Benedetti, thanks for joining the podcast. How you doing?
I'm good, David Ritchie. How are you?
I'm doing well. Yeah, it's maybe been 25 years, Mark, or something like that since we've known each other. I'm just dating back to the start of my career, KPMG. I think I met you at orientation when they gave us a pair of pajama pants and running shoes, and we started at KPMG. Is that right? Is that where we met?
That sounds about right. And I remember that we had a offsite in the outskirts of somewhere middle of nowhere, Ontario. And I thought, like, I finally made it. This is the big time. This is exactly what I've been waiting for.
Exactly.
So that was
exactly.
great. It was a great moment in our lives.
I don't know how much you remember, but I figure we should start off with a little bit of trivia, just to get the juices flowing here. Okay, so some acronyms that maybe you might recall. Okay, so what is a BUD?
Business understanding document, right there.
Okay, SID.
Significant issues and decisions document, also an important document.
SAD. Am I wrong? Did I make SAD up out of my...
That one's gone.
Is that summary of audit differences?
That could be.
Pretty sure. Okay, we'll stop there. RAM. I think
risk
that was a
assessment module. Something
or
along
risk audit manual. Anyways, pretty good, man. The fact that you got that after that long, because I know you have not been around audit for a long time. So you're executive president at Ardian. I know your title like goes a lot longer than that. Would love to just maybe kind of have you kind of share what Ardian is, what you do.
Sure. So Ardian is a private markets manager. So we invest in private equity and infrastructure and private credit and real estate, really across the U.S. and Europe. We've been around since 1996 was our founding. We manage $192 billion today. And we manage entirely private markets. We have a lot of investors around the world, pension plans and sovereign wealth funds and high net worth individuals and insurance companies, everything you can imagine, really everywhere. 1,800 investors around the world and across 20 different offices. You know, we have an office actually in Montreal, Canada. I'm here based in New York City, but we have our headquarters is in Paris and really everywhere you can imagine. And the company got its start managing two different strategies within private markets in 1996 as part of the AXA insurance company. And then we did a management buyout and became independent and became Ardian in September of 2013. So we're just over 12 years of becoming independent. When we left the AXA group, we were managing about 35 billion of assets, and so we've grown nicely, 192 billion today, and growing every year.
192 billion. So at some point, like, does your calculator run out? You guys got to do a lot of like rounding or cutting down those numbers, cutting out some zeros. That's a big size. Has it changed from when you started? Like, what were you at when you got there in terms of just kind of give a sense of the growth over the time you've been there?
Sure. So I joined just about 20 years ago. And when I joined, we were managing about 18 billion of assets. And I still remember I was hired, and at the time I was maybe employee number, 90. And the idea was, okay, we're not going to get past 100 employees around the world. And today we're 1,100 employees around the world. So we've grown a lot since then.
Hey, man, that's an amazing journey. And it's kind of rare to stick with, one place that long for anybody in their career. But like, just going back to the start, you kind of knew what your blueprint was a little bit. Like, I think you knew that audit was a great foundation, but you weren't going to stay there forever. And corporate finance was kind of the path for you. Talk a little bit about that journey and getting your CA, which is kind of a dated term nowadays, but your CA, your CPA, and then quickly moving into the world of corporate finance and sort of this path. Tell us a little bit about that.
Yeah, sure. So when I I went to school at McGill University in Montreal, and when I was there, I was studying finance, and I was very interested in that whole world and what that at the time. People spoke a lot about investment banking. That was the path a lot of people in my class took. Now, did they actually know what investment banking really was? That's a different question. But that was kind of the discussion point. And when I was studying and I was learning about the basics of finance and corporate finance, when I was learning about the audit and accounting side of things, to me, it felt very important to have a very wide foundation to understand both companies, but their numbers and what makes the numbers behind them. And so when I was coming out of school and I had this job offer to come join KPMG to start off in their audit practice and eventually move over to their corporate finance group, and I took the opportunity. And for me, it was great because it was all about, deep dive, learning about a business for a month or 2 months or a quarter and starting from zero. So you'd be parachuted in there with the team and you'd have to figure out what this giant communications company was doing or what this software company was doing. And so that really was the first part of the equation that was interesting to me. And learning about the numbers and what made those businesses tick, that's something that you have to do is when you learn to become an auditor. And getting that baseline and that kind of knowledge to me was great. But what I was really passionate about, or what I found incredible, was just learning these business models and what made them tick and how they were so successful and how they had grown. And so as I was then eventually, we went through the CPA path and did that. So I finished kind of a dual degree, started off with finance. I did another degree in accounting, and then I did my CPA. Once I had completed that and I decided to move back over to the corporate finance world, that was interesting to me too, because same difference, we were helping a lot of clients think through kind of small M&A projects. That was what the practice was really about. M&A projects, capital raising, that kind of thing. And what that then caught my interest was learning about the alternative investment universe and private markets. And I thought that was extremely interesting. And in fact, a couple of the clients we had at the time when I was working in that advisory practice was some private equity firms. And I was just fascinated about what they were doing, about taking these investments not for a week or a month or a quarter, but for 5-year periods, and then working on them and seeing how they developed and then seeing what the return was eventually. All of that was kind of the combination of diving into learning about businesses, which I loved as part of the audit practice, but understanding the numbers and investments. And I said to myself at that moment, I want to work in private equity and private markets. And so that's when I started to really look around for who was the best fit. And I found at the time AXA Private Equity, which is now Ardian, and it was, entering a couple of different asset classes, which were new but growing parts of private markets. And I thought it was extremely interesting. So I joined in the New York office at the end of 2005. And at the time, we were about 4 people in New York. Now we're close to 200 people in the US and, 1,000 people around the world. I spent a lot of my time working with people all around the world in different areas. But what I still love about what we do is this ability to learn about different businesses, entrepreneurs, infrastructure investments, private credit investments, secondary deals. These are all different parts of the equation of private markets and investments. And I still find it fascinating. And every day is a different adventure. So I still love what I do, but a great foundation coming back from when I started back in the audit days.
So you want to go back to audit? Because I know a few people still at the firm, and I'm sure they'd welcome you back, Mark. So is that?
I think I may have lost my my training skills at this point to be able to add any value in that domain. So
right. Well, I do recall your, mentoring leadership skills were pretty evident, early on. You helped me get through those UFI exams. And I remember asking your advice, and, I was like pretty bad at case writing, and, you were giving me guidance. And I said, hey, Mark, what I find, difficult is like managing time or, whatever. And if I go to the bathroom, and I come back and like, how do I manage, time during these exams? And you're like, don't go to the bathroom. Like, Mark, that is how do I do that? So now we're getting into, my drinking habits the night before in the middle of the night. But you got me through it, man. So thank you. On that note, like, what were the sort of attributes that you thought you have besides being smart, capable, hardworking, but you've grown into a leadership role in a firm like this, over the years. Tell us a little bit about that journey and the role you have today at Ardian, and that growth to get there and the growth that you're still continuing as a leader of a firm of that magnitude.
Yeah, look, so I think that a few things. I think first of all, everyone has to work hard. So you have to put your head down and just kind of work hard for what you want to, where you want to go and what you want to achieve. I also think though that you have to like what you're doing and you have to like who you're doing it with. And so I've always had the good fortune of every day when I was coming to work, I still remember my first few weeks when I joined the company, and this was amazing to me. Every day I was learning so much, and I found it always fascinating. And on top of that, all the people that I've worked with for so many years now, a lot of the people that when I joined that I got close to at the company, a lot of them are still there. My colleague Vladimir Kolas, who I've worked with for 20 years on the ground here in New York, we're still sitting 10 feet away from each other. We still talk to each other 20 times per day. And so I think that camaraderie of working with people that you like for a long period of time has been great. But then also, there has to be the opportunity. And for me, I've always been fortunate in that the company has given me a lot of opportunity to grow and to grow into my role and to try new things. And when our CEO, Dominique Sénéquier, gave me this role of executive president 3 years ago, it was something that, of course, I was honored to take and to try my best at. But it's not something that I was ever on the blueprint 20 years ago. 20 years ago when I joined I still remember to this day, I really wanted to become a managing director. That was my goal as quickly as I could. So I was trying to add value every day to the company in a way where I could advance and then that would be shown back to me by getting to a certain level. But then when I achieved that level, then it kind of changed because I had gotten to that goal and I stopped worrying about, what my title was going to be or where I was going to go the next 2 years or 3 years. I knew I was here for the long term at this company. And so I just put my head down and just tried to do the best I could in my job every day. And then, there was always more opportunity that was offered to me. So I joined the executive committee of the company a number of years ago. And so doing more than just managing, my Vladimir and we run the secondaries practice for the company. So that's a big activity for us. We have a $30 billion secondary fund that we just raised about a couple of years ago that we're investing. And that's our ninth generation fund. And so that was always, my day job. But then my night job was how could I help the company do other things, expand more in the US. And that became going from expanding to the US to just helping it grow its footprint everywhere around the world. And so I've always had that good fortune of being offered more and more responsibility and more challenges. So, I've never had a dull day since I joined Ardian. I still love the people that I work with, and it's fun. So, and I think that's what you need to have to be successful. You have to really love what you're doing, and you have to feel good about coming to work every day. You have to have that feeling that it's Monday morning and you're excited to go and get after it. So yeah, I've had a lot of good fortune over these last 20 plus years.
So how do you think that worked for you? Like, how do you find that? It doesn't mean you don't work a ton, but how do you balance that? And does the culture at Ardian just sort of facilitate that in a way that you think is unique in your space?
Yeah, so I think a couple of things. I think first of all, yeah, for me, I've got family that I spend a lot of time trying to manage everything as best as I can. It's never perfect, you know. There's a lot of hard work involved. Over time, it changes a bit. You know, early on in your career, it's a lot of hours, you know, working on in the office on projects, and then you start to travel a little bit more. And the travel schedule is tough because at the end of the day, we're a people business, and to go see our investors around the world is important. And I'm a big believer in seeing them in person. So, you know, I'm all around the world multiple times per year. But that's something I like to do. I like to go see them. I like to spend time with them, not just investors and clients, but then also our team, you know. So we have, as I was mentioning, you know, 1,000+ people around the world. So I like to spend time with them in different offices in different locations. So yeah, it's definitely a balancing act trying to make it all work. You know, I think that at some point you have to be very organized. Okay, and being very organized is a key to being able to do this job for 20 years. Because if you're not organized, it's very difficult to be able to do it all. So one thing that I've done, for example, to try to make it work is, you know, when we have all of the meetings and the trips and the various places I'm going to, you know, that planning for 2026 was pretty much done in March of this year, planning a full year ahead of where I'm going to be and how I'm going to spend my time. So that's important. You know, when it's family time, I try to really disconnect and make it family time. And, you know, one thing I try to be focused on is being present in whatever I'm doing. So if I'm doing family time, I'm doing family time. If I'm working on a project, I'm working on a project. If I'm talking with my colleagues, I'm really talking to them. And I try to pour 100% of myself into whatever I'm doing at that moment. It's not perfect. You know, it's a lot of hard work. It's true. Again, it comes back to having to like what you're doing, because if you're spending that many hours and if you don't like it, that's probably not the right fit for you or not the right job for you. So you have to really like what you're doing. But if you do, you know, that's fun. You know, that's exciting. Working on these projects or going to see people around the world, talking about how we could advance Ardian, the different funds and the different activities that we're doing. That's exciting. So I think
Awesome.
that's part of it for sure.
Awesome. Okay, Mark, like I think the you know, audience for CFO Hive, like and where our practice focuses outside of this podcast, you know, our focus a lot of times is in the mid-market, lower mid-market, and that's defined very differently in the US and Canada. But you know, owner-managed businesses, they've built tremendous businesses, and they're thinking about succession. They're thinking about maybe an exit, and private equity you know, comes up, and I think increasingly is playing in a lower market probably than you know, let's forget about the number of zeros on this. There's some basic principles involved. There's also a lot of, I think, confusion, at least for me, around, you know, all of you know, the flavors of private equity, and you've always, you know, talked about these you know, fund of funds and secondaries. Maybe just kind of break that down a little bit in terms of where you play and what secondary markets and secondary funds look like. And then I know you've also been talking about the democratization of PE, and I think that's sort of like a really interesting thing to think about. And obviously, the investor perspective is one, but what does that mean for business owners in terms of the evolving landscape for private equity and access to the broader market?
Yeah, sure. It's a great question. I think that if you look back, you know, when you and I got our start back at KPMG 25 years ago, and I was studying the private market universe then, back then it was still very much an alternative asset class. Okay, we're talking about the total AUM of private markets then in the billions and maybe hundreds of billions of dollars. If you fast forward to today, that whole private markets universe is close to $15 trillion around the world. So it's grown substantially. And that's going to go by 2030 to 20 to 25 trillion dollars. So it's going to continue to grow. And what it means is private markets, private equity, these are no longer alternative asset classes. You know, these have become much more mainstream. And to the point where, you know, way back when, many pension plans had a small allocation for alternative investments. Then it became an allocation for private equity, and maybe even in more recent years, an allocation for infrastructure, private infrastructure. And so they've built these allocations, and now it's very commonplace. Sovereign wealth funds, pension plans, insurance companies, they have these allocations that have been built out over years, and which are they're actually growing and not shrinking. So it's more mainstream. It's more something that you see daily. You read about it all the time about a private market solution for this airport investment, like we did with Heathrow at Ardian, for example. We're the number one shareholder there. Or if we look at these secondary deals, so the landscape has gotten bigger. So all of the different niche subsectors have gotten bigger as well. And so secondaries just provides liquidity to that 13 to 15 trillion dollar ecosystem. So if somebody needs liquidity on their private markets investments that are otherwise illiquid, that's where the secondary market plays a role. And that's grown substantially for exactly the same reason that the whole market's growing. People want to do more in private markets, but to do it efficiently, sometimes they need to, they're overweight US, they want to go more Europe, or vice versa, or they want to enter into Asia, or they want to go more middle market instead of large cap. And how can I do that? Well, maybe I'll sell some of my portfolio and actively manage it, just like you would your bond portfolio, your stock portfolio. You're going to actively manage your portfolio, and that's where the secondary market comes into play. And so we're the world's largest secondary investor. That's the activity I was mentioning about before. And so that's just another piece of the puzzle in private markets that has grown substantially. To your point about democratization, well, inevitably, if you look at the returns in private markets, they've been very strong. They've outperformed the public markets over 5 years, 10 years, 20 years by anywhere from 500 basis points plus. And it's done so with lower volatility than these markets. And so that catches the interest of a lot of people, especially the high net worth investor, and then all the way to the retail investor. And so version 1.0 of the democratization of private markets was, the ultra high net worth family office going through a bank feeder fund saying, okay, I see pension plans and sovereign wealth funds allocating whatever, 10 to 15% of their capital into private markets. I should be doing the same. And so we saw that wave over the last 10 years, and that's grown substantially. But version 2.0 of that is not necessarily even the ultra high net worth investor, but mass affluent retail investor who say, hey, my 401k or your RRSP, do you really need daily liquidity for 100% of it? For something that you're going to hold for whatever it is, 30 plus years without really taking cash out of it? No. There's a portion of that you could absolutely put into private markets that are illiquid. It's just the plumbing in the system is not there today. But that's all changing because there's a real interest from the private investor to invest in this market. And when the interest is there, you start to see the rules start to change. And so you're already seeing it. There's a lot of talk in the US of the 401k plans opening up to private markets. There are these funds, that are called semi-liquid funds that are popping up here in the US that are offering liquidity mechanisms for portion of capital that people are raising or that people are investing into their private markets. And so this is just the wave of the future. But today, the private investor is still, on average, 1 or 2% allocated to private markets, teeny tiny. If you look at the pension plan universe, especially the ones that have built out over many years, it's 10 to 15%, okay? So there's a lot of room to grow. At Ardian, we're seeing it. Last year, 20% of all the capital that we raised was from the individual investor, which is huge. If you went back 15 or 20 years ago, it was closer to that few 1 or 2 or 3 or 5%, nowhere near that kind of level. And that's growing. It doesn't mean the institutional investor is going away. All the opposite. They're continuing to invest, but they're starting with already a big built out book and they're growing nicely, especially in certain subsectors like secondaries or infra. But what you see is the private investor is starting from scratch. And so they have a lot of runway to build that out.
So what does that mean for businesses? Presumably, like there's a trickle down, even all the way to that mid market. I'm just thinking about, again, the owner manager that wants to sell their business, private equity's knocking the door. There's a lot of competition. Does that mean it just gets even greater and there's more money chasing these businesses? What is that trickle down?
The trickle down is that as we get to this $20 trillion of capital in the private market system, it means there's a private market solution for something that there wasn't before. Okay, so to your point, if you're an entrepreneur and maybe you've grown nicely in the US, but you're looking to grow in Europe, or vice versa, you're a European champion and you want to become a worldwide champion. And before you might have thought to yourself, well, the only way for me to get the capital I need to help me expand by acquiring another business or by growing into a new market is by way of IPO. Oh, and maybe I'm too small for that IPO market, so there's not a real solution for me. Private markets, private equity seems like an alternative asset class. It's no longer alternative. So people are looking at it as a tool in their toolbox that they can use much more easily. So there's more capital that's developed for that whole middle market platform. And then even as you get even larger to the large cap companies where IPO was the only solution for some of them, now there's a private market solution as well. So it just means that there's more of a track record that people can look and see and feel and touch how private equity funds are helping entrepreneurs, both lower middle market, large cap, and even some very large cap businesses grow and expand. And so then that just becomes something they're going to use more, and they're going to do it more often. And it's no longer this alternative spec of an asset class, but it's something that you can use daily. So I think you'll see more of it really everywhere: Canada, US, Europe.
Yeah, yeah. That I mean, I suspect it'll take a long time before, especially in Canada. I suspect there would be a lot to work out, but I guess the additional pool of capital that would be sort of available to these businesses, and as an investor, I just think the value creation is massive, in that space. And I know, like, at a level where companies are considering going public, and I guess still to this day, you probably see it at all sizes of businesses that, if you don't need to go public, then don't. I think
Yeah,
that's
and I think to your point, it's really a catalyst for growth. Something that we're proud of
yeah,
at Ardian, if we look at our direct buyout activities that we have across Europe,
yeah,
over the last 10 years, we've created 49,000 jobs through the portfolio companies that we own. So sometimes people like to think of private equity and private markets as being part of this asset class that you can't really understand, that's opaque. And yeah, there are some distressed funds out there, and there are some restructuring groups out there. But what we do at Ardian and what a lot of our peers are doing is capital to help companies grow, to help entrepreneurs get to the next level. Some of our best stories are us taking a French champion, helping them become a European champion. They're best at what they do in France, and maybe we're going to help them grow into Spain or other parts of Europe and help them get to that next level. Or even across transatlantic, they're great in Europe and they want to enter the US, and we've helped them do that. And so this notion that the right partner with a private capital solution can really be an ally for growth. I think that's where the market has changed its view. It's not something that they should be scared of. I don't understand. The entrepreneur can say, no, this is something that I'm going to look into, that I'm more and more comfortable with. And the results have been there. There's been tremendous growth for these private companies around the world with a private market solution.
So I think talking about those businesses that are looking to attract capital and the right kind of capital, and you talked about a champion in one segment to becoming champion in a greater segment. Like, what are some of those building blocks that you look for in a business? And what would you tell CEOs that you come across, business owners, entrepreneurs, that they should have in mind, whether it's early days or they're sort of evolved, but there's a lot of opportunity ahead? What are some of the things they should be thinking about to, get to a place where they would attract, sophisticated investors in the market?
We're very much focused on long-term investing and long-term decisions. So one piece of advice I would give is don't turn your business into something that's reactive. The market is changing so quickly, okay? Earlier this year, if you looked at the tariffs between country X and country Y, they were maybe 30 or 40% in one day, and the next day or the next week, it was half of that or not there at all, or on hold. So the market's moving very quickly. So what you have to focus on is making a plan that is beyond week to week, month to month, quarter to quarter, but rather long term, 5 years plus. And that's served Ardian very well. We think very long term as we look forward, continuing to grow and invest in our people and growing our footprint and trying to be really the best we can be for our investors every day. But I also think all of the management teams that have done really well for us have that same mentality. They're thinking about how can I be relevant to my customers? How can I be relevant to the ecosystem that I'm working in over the long term and not be reactive? Because if you're trying to be reactive to just what the market's doing, you're going to make a wrong turn at some point. Whereas, fine, it might not be linear, it might be bumpy along the way, but if you're focusing 5 years out, that gives you a different perspective. So that would be my number one piece of advice.
To the extent you have a perspective on CFOs and how much they're moving the needle, but like in these businesses, part of those executive teams, where do you see the CFO role from a strategic perspective? Do you see them as needle movers of separating the great from the good, like in terms of telling the story and understanding what you're talking about in terms of value creation and where to focus?
Yeah, absolutely. I think to me that this notion that a CFO is somebody who's just running the numbers is totally antiquated. The CFO is a partner in the business. And just like if you look across the C-suite at any organization, everybody's focusing their time on a daily basis on different things, but you have to have a strategic vision and we all have to be rowing in the same direction for us to get there. And, at Ardian, we're very lucky we have kind of co-CFOs on our executive team that have been part of our executive committee, which is where all the business leaders sit to help shape the future strategy of the firm at the Ardian group level. And so, it's Arnaud Cheliac and Isabelle Strujean, who have been incredible partners for the business and well beyond they're not just running numbers. They're thinking through all the financial issues that help us grow and become who we are and where we want to go in the future. So that's at the Ardian group level. But then even, we're in so many different geographies and we're growing very quickly that you need to have local CFO expertise in all of the major markets that we're in. And same difference. When I joined the company, I'm Rick Lepeu, who's our CFO based here for the U.S. Activity with our U.S. footprint. For us to go from 4 people to 200 people over the last 20 years, unless you have somebody who, of course, is strong with numbers and financial planning, but also has to be able to think strategically with you about how to achieve that growth, it wouldn't be possible. So, we're very blessed at Ardian to have that. We have CFOs who are real thought partners with us across our business. But then that's also something that we try to encourage our management teams to look at the underlying businesses, and that has worked very well for us over the years.
I'm really looking forward to seeing how the transcript transcribes the names you shared. Is your French obviously Canadian versus European? Like, do people call you out because you work for a French company? You speak French, but you're from Montreal. So yeah, how obvious is that?
Every once in a while, I'll come up with an expression that everyone kind of looks at me sideways, and I realize that maybe it didn't land on the translation from Quebec French to Parisian French so well. But no, I think one thing that I got to tell you that I do love about our company is when I sit around our executive committee and you have people from France or Germany or the US or Asia or Italy, and that diversity of opinion and culture, that to me is really exciting and always been one of the most fun parts of my job, is to be surrounded by people from everywhere contributing different ideas. And I think that's also why Ardian's been so successful over the years. This diversity of opinion, this idea of us all working for this collective, it's definitely a collaborative approach. It's a model that we all rely on each other, but we're always challenging each other with opinions and ideas from different parts of the world, which is really cool. But it doesn't necessarily mean they'll understand my Quebec expression once in a while. So
Right. Well, it wouldn't be as fun if we can't poke fun at each other along the way. Are you still playing b-ball, basketball?
yeah, there's I try to exercise a few times a week, but that's part that's a little bit tricky. It ends up being more like in a hotel fitness room at like 10 p.m. after I've finished a client dinner, and I'm on a workout bike, and maybe I'm giving you a phone call to chat while I'm doing it, given the time difference. That's more like my speed these days.
Right, right. Yeah, I've got a little bit of a knee thing going on, and also a recognition at my age that I don't really know how to lower the intensity level, and so maybe basketball. It's time to hang up those sneakers, those KPMG sneakers. Maybe referring back to that, but maybe a quick story to share with the audience was you and I going to play pickup here in Toronto. I think at a gym that I worked out at, and somehow I got into like an actual like fist fight on the court with someone, or at least they started punching me. So I guess I must have been a little too intense and too scrappy. But that's the brand of basketball I love.
I feel like finance, talking about CFOs, that's definitely more our lane right now.
Exactly. Well, you are 6 foot what? 6'5"?
6'5". That's right. That's right.
Yeah. So you got a better reason to spend time on the court. Okay. Quick hit before we go. Podcast playlist. I'm really curious to hear, what are you on your flights or on that workout bike? What are you listening to?
I am an avid nonfiction reader. Okay,
Yes.
so into podcasts, I listen to once in a while. I listen to your podcast, but I do a lot of nonfiction reading. So, I'm rereading the Steve Jobs biography right now because I find it fascinating. But I think that's been 99% of my consumption in the last 10 years. So I'm a little bit boring in that respect.
Okay. Any other ones that you recommend? Like, have you done Red Notice?
I've done Red Notice. Very
Classic.
interesting. Bad Blood, also very interesting story.
John Carreyrou. Yes, that's one of my favorites.
Yeah, a lot of good nonfiction stories out there, which are most of the time more interesting than fiction, if you ask me.
Yeah, likewise. The fiction the nonfiction that reads like fiction, right? Those are some of the best. Okay, so maybe I got to open this question up to podcasts and or reads, because apparently
Yes.
people still do read, which is a good thing. So
That's right. That's right.
Amazing. Hey, Mark, really appreciate you doing this, man, and good to catch up, and hope we can do it again sometime.
Thank you. Always great to catch up and reminisce on the old days, and thanks for taking the time to speak to me.